Well, what's going on? It's midweek update time. Joe with you here. February 8th. That's 8th, not 8th. But I like 8th. It's kind of fun. Let's talk about the markets. Take responsibility for it. Let's share some ideas. You guys get it. Let's get going right now. So the bullish surge in the markets looks to be stalling out at resistance levels. I'm starting to see a little bit of consolidation out there. We are above a decent little marker, but it's not quite. Well, it's not above August highs, that's for sure. So we are still within this kind of ABC correction with an overall downtrend. Corey had a really good end of day yesterday. If you guys wanted to revisit that, because he made a lot of great points of things that we've been watching. So we do have a very complacent sentiment out there, and I refer to it as the fear of the missing out trade. And it looks to be slowing. It's one of these things where, okay, now what do we do? We're waiting for the Fed to come on board. You've heard me say this a million times, and they did. Everything looks good. Everybody jumps in, buys, regardless of companies warning and saying they're going to slow down and people losing their jobs. The markets just take off, and they move higher. And understand it's the double-edged sword. It cuts both ways. You fire 55,000 employees, you're going to have a better bottom line, so your stock goes up. It's like, wait a minute, how does that work? Well, that's just a short-term fix. All of this is a short-term fix. And I truly believe that the fear of missing out trade was pretty much that last surge that we saw last week after the Fed meeting. I love giving my opinion here because this is kind of at that teetering point where we're looking at it. So this is where I need to be right. This is where the outlook that I've had since January should be right. It's going to be in the next week or so, or I'm just wrong. Right? Isn't that fun? Okay, cool. Well, I'm poised and ready to go, regardless of which direction it goes. So job numbers are still not cooperating. I said jobs numbers because job expansion, growth, hiring, and jobless claims, they're going in the opposite direction. This is a very hot jobs market. It's a tight jobs market. It's a strong jobs market. Now, the argument's made that most of these are service jobs, things that need to be replaced when it comes to the supply chain issues that we had in the end of 2022 and in 2021 because of the COVID. Now, if you guys were watching The Real Housewives last night, I mean the State of Union address, then you would have heard that a lot of green jobs were added. And so there's a lot of ideas of where these jobs come from and where they're going to be expanded to, right? I myself would rather watch The Bachelor, so I did not attend. Let's get into some trade ideas, and there are good ones out there, guys. There are great trades. So think about the ones that you've been looking at over the last couple of weeks are still there. They're just kind of going in the wrong direction. I want you guys to understand when it comes to trade ideas, I'm only doing the ones that I like right now. It doesn't mean the ones we've talked about over the last 3-4 weeks aren't good. It's just they're not really setting up. So the first one is R, and this has been talked about a while, and it just wants to continue to move higher. It still just wants to base and then run and base, and hopefully it's going to run. Now this is very similar to some of the markets, and I'll show you that chart here in a minute, but it is in a nice base up here. This was a diagonal spread, I believe, or something sideways to up, and I still like it here. It kind of a consolidation move to the upside. It's in the industrials, so it's not the strongest of sectors, but this is definitely an outperformer. It just depends on what you guys are looking for in the shorter term. And if you have if you're brave enough to take something over the next couple of weeks and expect it not to really go too far, but kind of float higher. It just depends on when these bulls decide to kind of, I don't want to say abandon the markets, but slow down. And we're seeing a lot of catching. We're seeing a lot of this last-ditch effort, this last guy, this last institution that's like, well, it's pulling back. Let's just get it in there. So we're almost fully vested. And what I mean by that is the complacency is going to get bigger and bigger as the people that have been buying through January are done, and the fear of missing out people get in that last push, and they're done. And we made mention about this. Corey once again said it at yesterday's end of day. That's that capitulation area, or I shouldn't say capitulation, the blow-off expansion. That's kind of what we're doing right now. But if you believe that it's going to go a little longer, this would be a nice place to park another bull, at least for a week or so. I don't know how bullish I'm going to be past that. Let's go to the SPY. This is our other, if I can get there, there it is. And I'll take a look at this in depth, but you guys can see that this was a sideways trade. It's one that I have as well. I decided to take with class. My midpoint's the 400 mark. But I've got a week and a half, and I'm totally comfortable with this candlestick pattern going on. This is a bearish Harami candle. I think that this might have been it, this little bit of a blip. We did have a pretty good run and almost a confirmation of a bull pullback yesterday. I was talking about that on Monday. Hey, this is just a bull pullback. And it looks like it was. And it did confirm that way, but it's stopped. It's hesitated. So since it's up, let's talk about it. It might be channeling up in this area. It might chop sideways. That is if the bulls stay in these markets. That is if there's still a couple of bucks on the sidelines that want to come in. That last-ditch effort, that last fear of missing out. And yes, folks, there are still lots of money on the sidelines, and there's still bravery out there because the February options have not yet expired. We know those are very, very loaded. So until the bulls are done or fully vested, we won't get that little dip. Now, it looks like we're starting. Maybe that because it could be in response of last night's Real World event or Bachelor, but it might just be, hey, we're exhausted. And I'm talking about the Thursday following that Fed announcement. So we'll see. Well, that's it. So I don't have to talk about the SPY when we get there. But I'm still liking this. I like it. If you guys want to get into it now, maybe a 410, 420, I'm fine with this coming back to the 400. I'm still confident in the trade that I have on this as well. So let's take a look at Alcoa. This is another sideways trade. What was really cool about that, let me switch my pen color over here. What I liked about that is we talked about it, I believe, when it was just a little red candle here. And it shot back up. Had this huge gap up, traded back down, and look right where it is, folks. It's coming right back to that 50 mark. I believe we were talking somewhere between the 54 and the 50 area as a range, or you can go even a little bit lower. But I do like it. It's still looking good. It's still looking sideways and consolidating. So pretty sweet, right? Okay, on the bear side, still like the ADT. This is a great one. It's got its extension. He always has these bounces. We just have to wait for them to sit through it. So it's just consolidating below here. Diagonal spread would work. This might be just straight short stock. I know a few of you do have this short as a stock. Makes sense. Still going the correct way, and I still like the overall pattern. All right. Let's go to Honeywell. A few of these looked pretty good. I think I've got Archer's. ADM is another one that we should talk about, but I don't have it up, but I like it as well. But here's Honeywell. And it's starting to slide. It's got this beautiful channel going on, and it just looks like it's about to roll over. You could play it to the 200. I know we've talked about it a few times where it did bounce off of it strongly, but hey, it's right back down to where it once was. Think about that. Good stuff, right? All right. Let me get into some... let's get into the market analysis. Sorry, guys, I'm trying to read and click buttons at the same time, and you know how good I am at that. No, that's not good. Yes. All right. Yeah, okay, we'll get there in a second. So let's get into the market performance. This is so far. It's just kind of hesitated, and we had a pretty good move to the upside on Thursday. And then today's candles gapped down and just parked it. Yes, a few of you guys have been pointing out the bearish Harami pattern as well, and I like it. It's very encouraging for some sort of at least corrective action or consolidation in the shorter term. So it's got me pretty confident in throwing out something a little bit more sideways, something even more bearish. And you guys understand my outlook, right? I'm thinking that once these bulls dry up, we got nowhere to go but down. We'll see. So we got the diamonds, the SPY, the Qs, flat. They haven't done anything. This is Monday, Tuesday, and Wednesday. That's it. That's all I've got on this so far with this number. Oil up 5.25. It had a big move yesterday, and it's still it's flat today, a little slightly up, but a big surge above. Oh, geez, it was 77, I think. I thought I saw about 77, 77 and a half. but it had a pretty good push. And the gold is just kind of meandering around as well. Let's get into the chart. The SPY we talked about. We're in a consolidation area. I think if it could stay above the 410, I think we base. If it gets below, I think we retest that 400 very quickly. I really do. Let's talk about the other ones I could draw on. Now, the diamonds here, this is interesting because I keep looking at it and saying, well, it doesn't look as strong as the others because it didn't really come up as much as the others. But then I forget that if I was to go back, we're already at August highs. This thing is already at August highs where the Qs and the SPY are not. So it's showing that, oh, geez, I don't think the diamonds is really participating. It's like, well, it already has. This surge really put it a lot higher than the other two indexes. So I do like it as an ascending triangle pattern. I do still like it as, dare I say, kind of a hedge out if the market's all correct. I don't think the diamonds or the Dow will survive it if it's a general sell-off or a massive correction or a continuation of the overall bear trend. This will probably slip. But if there's any sort of churning going on or volatility, it might be a nice little flight to safety because this could just blip back up to this area or even just consolidate sideways and not sell off as hard. I don't know. We'll see what sells off first. This is going to be the spillover, and Corey made mention of it yesterday, and we talked about it a week before. There will be a slowdown. I don't know if there will be a recession, but there will absolutely be a slowdown. It's just going to be delayed, and it just depends on how the markets or where the sentiment is at that time. So it's really just two worlds kind of colliding at the same time, and they have to hit it perfectly. We have to be losing a job, kind of pinching the panky bank, and then all of a sudden these markets just start to fall apart. And it becomes one of those things where it's like, do I want to put more money into it, or should I take it out so I could make rent or pay for some food? When you have that, I know that's a little dire, but think of it as not that dire, but a little dire. Then you're going to get that perfect storm, and that's where it's going to fall apart. And it will be interesting, folks, because we won't know why. There'll be a lot of talk of, we don't understand why the markets are falling. Things are looking good. Companies are starting to beat numbers. People are starting to get rehired, and then it'll be this slow move back to the other side. So there's my Clio for you, right? Telling the future. Here is the Qs. We broke out, obviously, the leader when it came to this blow off top, and it's my favorite example to use when it comes to it because it is where the money went. Here's the volume, the fear of missing out, that last surge, and what do we do now? So we still have that Harami pattern. Yep, good job, guys, for pointing that out. And it is showing a little bit of weakness. Now, it does have support around that 300, boy, all the way down to that 295 even. You could even come down and hit this rising 20-day moving average at 290 and be okay. I just think if we sell and it gives it up, it's going to go fast. And it'll be kind of a bummer because we'll be trying to catch a falling knife. That's okay. We'll wait for consolidation or breather, and we can get into the bear side later on. All right, so there's that. Let's get into some economic reports. And we don't have much, just a lot of Fed chat. But Thursday we have something that's going to be pretty interesting. So you can see here we just got Fed chairs and all sorts of Fed speak. But the initial jobless claims raises an eyebrow. It's just something that I'm going to just keep an eye on. 183 expecting an increase, so this is going in the correct direction. We want to see slowing and easing. We'll see if this number goes up, I should say. It should go up. Then that shows, hey, at least we're starting to see some of these layoffs or some of the people that have been recently laid off are going through earnings, or I should say savings, or maybe they got a little bit of a buffer before they actually have to go look for work. There is that transition. So, I know we saw about 250,000 tech jobs over the last 2 weeks. However, these people might not need to go to the unemployment office for a month, 2 months. So we'll see when that number starts to catch up. That's the delay, and I think the reason why we're seeing these kind of contradict each other, right? Usually it's the jobless stuff that's the latest. All right, so there is that. What's my next slide? Oh, my next slide is my outlook. But hey, I'm going to pull the class. And thank you, Esben. Let's give this a try. I've got a weekly outlook first, and then I'm going to do a monthly outlook. How's that sound? So you guys right now, click some buttons. This button is going to be for the weekly outlook. What do you guys think is going to happen the rest of this week? While you're clicking buttons, I'm going to see if I can peruse your chat board here and read. All right, Robert's got a couple of trades to look at. Okay, and Joel's got trades. Okay, good, just trades. All right. All right, folks, I'll do my best to go through those once we get this poll done. 100% voted. Wow, that's awesome. Okay, so let's close the poll and share it. And we've got 47% flat, 35% -1, 29% +1. Look at that. We're real close to +1 or -1, but just a slight edge to the -1. So pretty much flat. We'll call it flat with a slight edge to the bear side. All right, guys, awesome. I'm going to go ahead and let's go ahead and hide that one. And then I want to do the monthly outlook. Let's launch this one. Did I get it to work? There you go. All right, so we're pretty much zero on the weekly. Let's go ahead and try the monthly outlook and see where you guys are in the longer term. It's very difficult for me to, once you start to make projections and you see something over and over and over when it comes to this ABC correction and this overall bear trend and the pattern, and then you get your bias in there, and then you hear me tout about economic numbers and we talk about earnings numbers, and I just spin the picture in my bias. It's very difficult to unwind that. Technically, we're above these moving averages. We're showing some strength. We should be +1, something like that. However, this could just be that blow off top. We are running into a little bit of a slowdown economically, and then we could roll out and fall apart. Earnings season was bad, even though it was met with buying. Doesn't mean it's necessarily correct. Ha! 100% voted again. Look at this. All right, let's go ahead and share this poll. 41% -1, 35% -2. Wow, awesome. Okay, cool. Different picture. I actually like this. I like separating. Hopefully you guys like it too. It's kind of neat because we're 0 to -1. That looks neat. Okay. I guess it's safe to say that, right? Because 35% were -2, 41 right in there, right in that area. Even maybe -1.5. Excellent. Thanks, guys, so much. Cool. I'm very close, but I'm going to spin to one side. I'm a +1 on the monthly outlook because we haven't broke down yet. Now, I agree with the -1 monthly outlook because of everything I just got done talking about. My bias, the downtrend overall, the exuberant purchasing through January, the fear of missing out at the very end with a blow-off top. It's just all, I've seen this so many times, right? Doesn't mean it's going to happen today. So I'm just going to wait and keep my +1 on the monthly outlook until we break. You guys could squint down and see this. Until we break that line. We start to break Thursday's low and come back to that 20-day moving average. This immediately, I won't even get to 0. I'll just go straight over to -1. And this will probably go down to here. Because I'm moving below averages, I'll start to see a slope. That way, this could turn red, this can turn red, and then I've got my justification. So I'm very simplistic when it comes to how I measure these guys, and I move it quite a bit. So, all right, thanks, awesome. So let's get into the sector analysis. And what do we got going so far? Technology, strong, materials. Now, what's awesome about this, we'll zoom in here and take a look at it. This is from Wednesday to Wednesday. And I always say the differences every time. I know you've heard me say it 100 times, or if you're brand new to this class, you're welcome. The first thing we look at when it says the week so far is Monday to Wednesday. What I like about this is it's a true Wednesday to Wednesday. You can see that technology was obviously the majority of the surge we saw from Wednesday, which was the Fed report, through Thursday, through a weird Friday jobs number, and then into the Real Housewives episode last night. So Boom, here we are. Technology still strong, even though the markets are down slightly today. We'll see here in a second. Technology was absolutely, without a doubt, the leader of that push to the upside. So what did that do to the charts? Well, let's take a look at it. Breakout above that 135 area, pushed above the highs that it set with that gap in December. I'm going to tell you something, folks. I truly thought that that was it. I'm like, oh, that's it. That's the blow-off top, dark cloud cover, all sorts of different candlestick patterns in there. Boom, that's the end of the world. And it just stopped. Stopped thinking, okay, well, the beginning of the year, guess what we're going to do? No, we did not. In fact, we did just the opposite. So we'll see if we're in a similar situation. We'll see. But it is definitely above those resistance levels. Let me go ahead and draw what I need to see. So it needs to be down here. It's got a ways to drop, and it's really extended itself. Look how far away it is from its moving averages. You guys cast your minds back to the Market Masters classes. Part 2 talked about the moving averages or secondary indicators. This is the expansion. See how the price starts to move further and further away? That shows expansion. That means it's accelerating. What usually happens is it gets exhausted and it comes back, right? Retracement to the mean. So there's all sorts of different things that we're seeing in the tea leaves here. But it's the strongest so far. Let's get to the weak one here. This is materials, and it's just weak because it's consolidating. I imagine if we zoomed out, this would look very similar to the diamonds, as it's probably pretty close to its highs way back in August. I don't know for sure, but it is definitely right up against and breaking above the highs that it set in November and December. So it's just a little weak today because it's just consolidating, or this week, because it just isn't really participating in that big surge that we saw from last Wednesday. Cool. All right. Let's get to the conclusion, and then let's go take a look at the markets. So the markets could consolidate at these levels if the bulls can stay active. There is still tons of money out there. It was interesting for me to really think, okay, well, people are starting to lose their jobs. Housing prices are coming down, blah, blah, blah. Rent's increasing, but there is still a ton of sidelined money. We'll see what happens. One thing that was kind of quietly rallying for a while was all the cryptos. The cryptos were at one point, well, Bitcoin was, 17,000? Now it's back up to 22 in these levels, so a little bit of a surge there. So there's still money that I believe some of the fear of missing out people are still actively kind of taking small nibbles at these markets. If that continues, we'll stay sideways. How do we know when it stops? Surges. One more surge to the upside with a ton of volume is usually a blow off top. Or when we start to slip, we do need to see this VIX participate. The VIX is not participating because the volatility index tracks the purchase of S&P call and put and call contracts. We know everybody's loaded up on protective puts. As soon as we see a run back to it, then we know, and what will happen, the VIX will spike. That means people are racing out to buy more insurance because their insurance is about to lapse the end of next week. All right, there's something to look for. That doesn't mean that's exactly what's going to happen, but that's what I'm focusing on. Sentiment is absolutely complacent with signs of bullishness still, and I do think that maybe it's late to the party, right? I can do this, but there's still people willing to show up. And I remember back in 1999, 2000, 2001, folks, I remember being the last guy to buy the .com stuff. I mean, I bought it all the way for the year or so, but I was still buying right at that top when they were warning. And Greenspan, Alan Greenspan, if you guys remember far back, he was the Fed chairman. He cut interest rates. He cut interest rates because he knew it was just going to explode. And it did, but I was still buying. So I've been late to the party. It sucks. But that maybe it could be what we're seeing. Economic data, the jobless claims is tomorrow. I don't know if it's going to have too big of an impact. I don't. But I don't know. We'll see. We'll see. It'll be interesting to see if it's just going to be glossed over. We do have a lot of Fed speak, right, Powell? And then we've got some other chairs talking today and even tomorrow after that number comes out. So we'll see. What did we see from the real world or the real housewives? Large buybacks with higher tax. So Biden's thinking about raising the tax on buybacks and kind of showing a little bit more punishment. I think also a higher tax on billionaires. And we've heard this before, and we know that it's actually an awesome threat. I think it's great. I'm not even political wise. It's just it's kind of cool because it keeps things in check that are maybe a little bit more expanded. You guys are going to have your outlook on your political side. That's great. It doesn't make a difference, but will that have an impact? Right? We did gap down this morning, and we are selling off a little bit. So maybe that's a little bit of shaky ground. Maybe there's some bigwigs out there that are trying to pull back a little bit. I don't know. It's up to you. That's a game I don't play with. All right, so there it is. That's all I got for this Wednesday. Let's go out and take a look at what you want to look at and see what the markets have given us. Where am I at? There we go. Okay, so we opened up. You can see just kind of slipping a little lower. Looks like we're finding our first bottom for the day. Having a bounce off the first bottom of the day. You guys have heard me tout 1,000 times. The markets usually take 3 directions. It's morning, lunch, and afternoon, or close, right? Open, lunch, close. It could be, all 3 directions could be the same direction. It doesn't matter. It just depends. But usually you do see differences in participation. All right, so let's get started here with Ben. For Jason, Ben the stock. Now, Ben has also been on my watch list. I do like it. It's just one I didn't really pull up as an example, and the reason being is because it's still in its pullback. He's looking for a March 17th, 32.5, 35 bull call spread, and I agree. If it holds, it's a great pattern. It's a great pattern. This is one that was on our watch list. What did I see? I don't have it. It was a while ago. It must have been in January. But look at that. It's a nice base breakout. It also participated in a little bit of that shoot up. It's pulling back, but I do like how it's quiet. It's just pulling back. It's bleeding lower. It's one that that might not freak out and fall apart. That being said, if the markets do correct, then everything's on the table. We'll see. But for now, the pattern's great. The pattern is great. Let me get a new pen and paper here and start writing them down. And I like the March is pretty far, but it'll absorb a lot of this. Going February might be too soon. If it's only got February and March, you kind of don't have a choice. But I do like that you're shooting for the 35. So give it a little bit more. You're going to play, hey, let's see if it'll do what it did the beginning of the year or what it did halfway through January. Another surge like that would be good. All right, I got it down for us. Thanks. Okay, Robert's got SBA. See if I can read along here. It looks like a high base, he said, since January. Whoop, not SBA, CS, or BA. BA. Sorry. I need my glasses. Is that $ BA? Yeah. The midpoint, yes, it's definitely high base. And Boeing has been on our watch list since the 18th of January, and it really hasn't done much since it did break up the beginning of January. But I do still like it, Robert. Yeah, base is about 210. Diagonal for 6 to 8 weeks, short premium until the thing breaks out. 215s. Okay. Yeah, it's real tight up there. Oh, I can make it less tight if I zoom in, right, guys? There we go. Let's take a look at this. Yeah, this is still on my watch list. I'm gonna wait for this thing to go ahead and break before I buy it. But I do like Robert's attack on this. Let's go ahead and go ahead and just throw on something diagonal, see if it moves. Yeah. And he's just going to keep selling premium, and he said until it breaks the 203 mark. It's fine. Or if it breaks up, that's fine too. This is a great opportunity to do that. Right? These are, as long as these markets decide they want to if they want to continue to meander and just kind of churn sideways, what a great thing to play. Yeah, let me put Boeing down. I'm going to put it as a sideways because I think that's how Robert wants to play it, but I'm going to put an up arrow too because it's a nice high base. It's a nice high base. Okay, moving on. BK. Is this the Bank of Mellon? Bank of New York. It is. All right. Nice breakout. Let me zoom in before I start getting too deep in this. There we go. Outperforms the XLF breakout candidate yesterday and has also goes up today. It for sure did. Yep. Diagonal on it if you want to, you think it's going to play this kind of game that is played here. It's only, that's pretty good. Yeah. It jumps around a little bit, but I like it stays in its $2 range. It seems a little bit more absorbable. And what I mean by that is absorbable by emotion. Right? It's hard to watch these things jump around. But yeah, I'm going to put it down on the bull side. Diagonalize might be a good one on that. Just go in and see what you can find. Cool, thanks, Felix. PG. Straight put, March expiration, 125, reasonable target in the next few weeks. Let's see if it is. Let's find out. Yeah, I like PG as a bear. I absolutely do. You're less restricted, Joel, as always with straight puts. That's cool. If you can position size for max loss or put some sort of a stopping mechanism on it, that'd be great. I know a lot of people around the Maverick community have been using stops on some of the commodity stuff like gold and oil, just in case they whipsaw out. But yeah, they're easier to manage if you can afford it, and I think that's cool. 125 is a reasonable target. Let's see. It could be if this really falls apart. I'd say 135 maybe your first target, Joel, and the reason being is because you could see that it was a support level here in September, come across. Well, where's my straight line button? There, I got it. There it is. Yeah, that resistance there in October. So, and it is below the 140 though. I like it. I like the float. If you want to just squeeze this thing, it might be a little expensive to buy more than one or two contracts, depending on the size of your account. Maybe two contracts, take one off here, and then just milk the other one. Because there is another argument to be made here. You see these little pivot points here? They can be areas of targets. And then you go down to this guy here. You can see these two here. There you go. So you got some levels. But your first target there at 135, if it falls fast without increase in volatility, you'd be surprised on the money you can make on a straight put. Let me put it down as a bear. Thanks, Joel. I like it though. If you guys want to do something a little bit different, you could do a shorter term vertical spread, you could diagonal, you could do whatever you want, but I'll just put it down on the bear list for now. Thanks. AMGN. Put butterfly with a 235 mid. I think I'm reading that right. Let me see. Zoom on in. Expand, move it down. There we go. Actually, let me shrink this so you guys can see that pivot up there. Okay. So that is a 230, 235, 240. Where's 235? Right in the middle of 230 and 240? Yeah, probably. Okay, sure. It looks like right around that gapping point is the 240. It looks like it's about to flow through that. And this could hit that 230 and maybe bounce back. February 17th, so just a week and a half. So this is a tight one. I'm okay. I'm going to put down AMGN on the bear because if you guys wanted to play something a little bit more longer term, I could get behind that as well. This has been really weak. It just loves to do these things, this little bleed. So that might be something kind of fun. I imagine it might consolidate first. It could, I don't know. It's looking pretty weak, isn't it? I like it though. I like the targeted butterfly. High reward, low risk, depending on how you size it, right? But looks nice. All right. Yeah, Brett's exactly right. Brett says tech is pretty much saying hold my beer. And for you guys who don't know that joke, you don't live close enough to Idaho, right? One thing, it's a joke, right? What's the last thing an Idaho man says before he dies? And the answer is, hold my beer, watch this. That's the joke. See? Okay, right, Ivan. Hopefully that didn't offend anybody. All right, let's get going here. Joe's got Bud, B-U-D. Watch for the break below 58. Let's take a look at it here. Let me zoom in a little bit. All right. Speaking of beer, what a great segue, huh? Good job, Joe. Did you guys plan that? All right, let's see. Break below 58. Yeah, I like that. Let me keep reading. Looks like a 2050 crossover about to happen. Downside could retrace a little bit. Think about bear put spread like a 59, 56 for February. Okay, sure. You know, and you're just hitting support levels. It's great. Look, I just like that. That's a really nice trend right here. That looks good. And this is a nice gap that it had here. And then breaks down. He's thinking the 56 level. You guys can see that there is. I'll go all the way back to here. There's an argument for that, of course, for sure. And you're thinking, was that a March expiration? Oh, February. Yep. So like a week and a half. And that could happen. Yeah, definitely. Float over. Sure. Sure. And you know what's really cool about this is you could do the 58, 56 for March. And let's say that this floats down to 57 and a half. You can still unwind this thing on the expiration cycle, even if it doesn't hit that 56. Allowing the vertical spreads to decay all the way down, you'll be surprised on, oh, it only reaches half my target or a third or 2/3 of towards my target. Just letting it go to the expiration cycle changes everything. So I'm okay with that. I was going to suggest just a straight 58 put. That way you can take it when you want to. However, the argument can be made, and if you will be patient enough to sit in it and let it decay, vertical spreads can be really great. Where vertical spreads are a bummer is when if it was to hit 56 in 2 days. And then you're just, they're frustrating. At least I struggle with them. I don't know about you guys. Okay. Okay. IDXX. Moving along here, folks. Okay. Wants to. Okay, shares only looks like it wants to break out of high base. Also, okay, let's do this one first. Don't want to read two trades at the same time. All right. Yeah, it does look like it wants to break out. Pretty expensive one. Probably want to combo that. Let me put that down as the bull. IDXX, and then let's move on to XEL. Also short XEL with a target of 66.95. All right, Brett, let's take a look at this one. But yeah, I agree with this IDXX and XEL. Got a bull and a bear. Ooh, okay. Yeah, sure. Very nice. Okay. 66.95. Oh, okay, maybe just this area here. Right about there. Am I too high? I am too high. Right there. Ooh, I'd be a little bit more aggressive with it. I'd shoot like maybe like 66 level, but I do like it. I like it sideways to down. Let me write that down. Okay, make sure I'm writing this on the correct tab here. Oops. All right. Okay, Coca-Cola for Robert. March 17th, February 60 calendar put spread. Okay, I'll write it 60. Okay, neat. Zoom in on this. Okay, I can get behind that. Calendar put spread at 60. Slightly in. Now these, depending on what you get for it, because it looks like you're doing a. Okay, 17th of February, 3rd of March. So you're doing week 1 of March and regular expiration. That's fine. Whatever, depending on what you get for it, it just will kind of dictate how much room you have in this tent. I can't draw these very well, but I think I got it. So as this stock goes down, even if it's like to the 59 area, here's 60, you could still be in this area. That's kind of where I like these. Now, I drew that kind of wide. That means you get a really good price for this calendar spread. The butterfly would probably steepen this a little bit more and give you, I should say, a little bit like that. So you won't get as much on either direction, but you will have a finite. I know, sorry folks, I'm awful at drawing. finite risk. So there are times that the calendar is much better, because what's cool about the calendar is you kind of have the same as a butterfly, but you're not locked in to one deal. And what's really cool about it, check it out. If this starts to bleed off and the one of the legs expires, guess what he's left with? Straight put. So I do like it, and I like the calendar. So I'm going to put Coca-Cola on a bear side, even though you're doing the calendar, if that's okay. Because I do like it as a bearish chart. That's a fun trade. Thanks, Robbie. Oh, and then he went on to say, yep, basically his management system. If it moves up, he'll close the whole position. If it breaks down, I'll close the short leg and see what the long puts do. Sure. Or, I mean, you've got the 17th expiration. Would be cool, Robbie, is you could just let it just play itself out. Maybe even if it starts to float down there and you've got to buy it back later, it's best to buy it back when you have to versus buying it back too early, because if it does move lower, those puts that you sold will also increase in volatility, so you might be paying a premium for it. Best to just kind of let it play itself out. That's what's cool. Remember, you have this flexibility, even if it goes to break even. So, I mean, be patient with it. Nice job. Robbie did ask, how many Robs and Roberts do I have? I've got 3 today. But you're Robbie. Everybody else is Robert. The other 2 Roberts have to fight on who I'm talking about. And if they don't know, well, that's on them. All right, let's get to another UBS. Nice base, but waiting for a breakout. Okay, let's take a look at it. Get rid of my markers. Yep. We got a lot of these, don't we? You know what's kind of interesting, folks? If you notice that a lot of these are in the financial sector. Well, we already have BK down. Ben's actually kind of moving, and then now UBS. What's going on with finance? Did we see XLF? I don't know if I looked at XLF today. Let's just take a look at it. Yeah. Interesting. Huh. Okay. XLF's another trade. Let me go ahead, go back here for you, Felix, and write down. I do like UBS. Yeah, UBS. Nice. All right. Let's see. I think we're good there. Okay, cool. All right. Let's take a look at what's happened since. And then I'll see if I can cut you guys loose. All right, looks like we are going to move sideways. Maybe roll over here in a bit. I don't know. We'll see. There we have it. Excellent. Okay. So it's kind of where you find it and where your outlook is. And it's really cool. It seems like you guys' monthly outlook are looking a lot more bearish, which is cool because I do my top-down approach and I follow along with what I have. My positions are sideways, bulls and bears, and it's doing everything I thought. Sideways is okay. It's a little out, but it could come back in with bearish move. My bears are actually doing good, and my bulls are just garbage. So it's kind of hard to have a +1 that I do, but I'm just doing it with my top-down approach and my moving averages. That can change. So let's just prepare for it and see what happens. But other than that, we just got to kind of trade the markets in front of us. All right, thanks for joining me. Thanks for your participation. You know how to get a hold of us, and I'll talk to you next time. Bye, guys.